Bitcoin just got another massive vote of confidence, this time to the tune of $427 million. Strategy, formerly known as MicroStrategy, has acquired more than 4,000 Bitcoin, pushing its total holdings above 580,000 BTC. That's over $40 billion worth, cementing Strategy's place as the largest corporate holder of Bitcoin on the planet. To make the purchase, Strategy tapped into traditional financial tools. The company raised capital by selling common and preferred stock, including nearly 850,000 MSTR shares and two classes of preferred stock, S3 and S3F. These fundraising rounds brought in almost $430 million, which were swiftly deployed into Bitcoin. The average purchase price for this round was around $106,000 per coin, a premium over their long-term average of $69,000. But not all investors cheered the news. Strategy's stock dropped 7% shortly after the announcement, trading around $369. This likely reflects market caution or short-term profit-taking, especially with Bitcoin hovering below recent highs. Strategy isn't alone in this trend. Semler Scientific also stepped in, purchasing 455 Bitcoin for $50 million at an average price just shy of $110,000. These moves reinforce a growing narrative. Bitcoin is becoming a strategic treasury asset, even for non-crypto companies. Zooming out to the broader market, US-based spot Bitcoin ETFs are hitting fresh milestones. In just 1 week, these ETFs saw $25 billion in trading volume, the most since December 2024. Net inflows hit $2.75 billion, the second largest week since they launched. Leading the charge is BlackRock's iShares Bitcoin Trust, or IBIT. It now manages over $71 billion in assets and holds 3.3% of the total Bitcoin supply. Even more impressive, IBIT has gone 30 consecutive trading days without seeing significant outflows. That's a strong signal of long-term conviction among institutional investors. All of this is fueling bold price forecasts. CoinCodex predicts Bitcoin could hit $180,000 by the end of 2025. Standard Chartered is even more optimistic, calling for $200,000. Their analysis cites institutional rotation from gold ETFs to Bitcoin, increasing macro demand, and Bitcoin's appeal as a hedge during bond market volatility. Bernstein analysts also weighed in, predicting $200,000 by the end of next year. Since late 2022, institutional Bitcoin holdings via ETFs have grown fivefold to $60 billion. According to Bernstein, this new institutional era is becoming a defining force in Bitcoin's market structure. There's also a political angle. Recent Trump-aligned appointments to U.S. regulatory roles have lowered perceived legal risks for crypto. And BlackRock's Jay Jacobs noted that Bitcoin's resilience during geopolitical tensions, especially U.S.-China economic pressure, has strengthened its case as a durable macro asset. Add it all up, and the message is clear. Between Strategy's aggressive buying, ETF inflows, bullish forecasts, and growing institutional interest, Bitcoin could be setting the stage for its next major leg up. The only question now is, how long until we see that $200K price tag?